So here at Solitaire, we offer many different programs for financing. So you've got differences between like home-only chattel, which we've talked about in previous episodes, as opposed to like a land-home package that's a real property transaction. Generally what you'll find though is term limits, 25-year max on doing a home-only transaction. They'll go up to 30 years, just like a regular site-built house, regular residential mortgage on a land-home real property transaction. Interest rates are going to be, they'll fall in line with what the standard rates are, the FHA Fed rates for land home packages. There's some ambiguity there because you can also buy those rates down. So you can get your interest rate on a land home package, say like an FHA government-backed deal, you can get that rate down to 4.5, but you're going to pay for it in fees and points. And so that, if you're not looking hard enough, you're just going to see that interest rate, you'll overlook all the fees because you're okay with the payment. Well, take a look at those fees too. There's banks out there that are competing for people's business and the fees are a huge part of it. I've seen on some packages like FHA, VA loans where people have paid up to $45,000 in closing costs. Astronomical. I wouldn't do it personally, but that's what it is. So you got to look at that. Closing costs on like a home only transaction, they usually charge either 3.5 to 4 points. What that means is 3.5 to 4% of the loan amount, or the sales price, excuse me. It's the sales price they go off of. So they charge you what they call a origination fee. Most banks cap their origination fee out at $4,500. $4,500, $45,000. I'll take the $4,500 over the $45,000 any day of the week. Promise you that. Now, penalties. There are no prepayment penalties with any of the banks we deal with, so you can always pay that loan off early if you want to. I actually coach my clients into, here's how you beat the bank, making extra principal payments at least once a year in the total amount of your payment. So if your payment's $1,000 a month for principal, interest, taxes, and insurance, if you can make one extra payment per year, that'll knock your 25-year note down to about 15 or 16 years if you do that consistently every year. And the more of those you can make throughout the year, financially available to make them, you're gonna knock that term down from 25 to 15, 12. You pick it, put it into an amortization chart, and you'll figure it out.